Hey everybody, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Folks, quick update here around the NPM vulnerability supply chain attack news that I gave an update on yesterday. Well, Trezor, which is a hardware wallet maker, they're one of my sponsors, and I use the device, the Trezor Save 5. They gave a big update here saying the Trezor firmware and hardware wallets are not affected by the NX/NPM supply chain attack. The attack involved malicious JavaScript packages from the public NPM registry. This technology is not being used in Trezor firmware at all. They said, as always, remember, hardware wallets keep your keys secure, even if software is compromised. Always verify the address on your Trezor screen. So make sure you double check, triple check everything if you're moving funds. And as always, don't trust, verify, double check everything, folks. It's so important because, there's a lot of hackers and scammers trying to go after people's funds, but it's great to hear Trezor was not affected. And if you're a Trezor user, this is very good news. You can put your mind at ease. And this certainly puts my mind at ease as a user of the Trezor Save 5. Now, moving forward, Vietnam approves a 5-year trial program for crypto trading platforms. Just yesterday, I told you guys about Kazakhstan's president saying they want to build a crypto reserve and provide legislation. So we are seeing across the globe game theory playing out here. No one wants to get left behind, and all of these countries are embracing the crypto asset class and industry. They're providing the guidelines. They're going to tax it, of course, right? The tax man has to get his cut regardless of where you live. But clearly, they're embracing it. They're now banning it, and it's here to stay. I think that's a foregone conclusion. The train has left the station. The genie's out the bottle. There's no putting it back in. So very bullish news. Moving ahead, Ripple says they are expanding their partnership with BBVA. So that's the Spanish bank, saying they're bringing their institutional grade digital asset custody to Spain. BBVA is responding to growing customer demand for crypto assets, with Ripple providing a secure and compliant custody solution. Very big news here for Ripple. They have various aspects of their business, a custodial business. They have a stablecoin RLUSD. They have their own blockchain, the XRP ledger, with a native asset of XRP. So the more banks and payment companies you get in your ecosystem, the easier it is to pitch them all these other services, right? So if BBVA is just using crypto custody from Ripple right now, you can imagine Ripple is going to say, hey, check out our stablecoin, or build or tokenize on the XRP ledger, and so on and so forth. So this is very good news. Now, Casey Craddock, if I'm saying his name right, who's managing director at Ripple, said, our new partnership with BBVA is another clear signal that the world's largest banks are embracing digital assets, spurred on by regulatory clarity from frameworks like the EU's MiCA regulation. Very excited to be providing our institutional grade custody technology to support BBVA's retail crypto offering in Spain. Another major takeaway there, a bank is offering crypto trading, right? So you see the layers to this cake here, or to this onion as you peel it back. It's amazing, guys. It's a great time to be in this asset class. I hope the price is not distracting you from the adoption and the building that's happening, because the price will follow all of this activity as the on-ramps are being built by the biggest institutions in the world, like stock exchanges and banks. And in addition, folks, notice Casey mentioned the EU MiCA regulation. Guess what's going to happen when the Clarity Act is passed here in the United States? And we just talked about it in yesterday's podcast. The House of Representatives is calling on the Senate to get this bill through, right? Just imagine the innovation and adoption that's going to take place in the United States, where we have the largest capital markets, the largest institutions. Just imagine what they're going to do. And we're already seeing some of it through the ETFs, right? And tokenization. Just wait till the full clarity is there. We're going to see mass adoption like never before from institutions as well as retail investors. Now, folks, a great place you can invest in crypto, buy, sell, and stake your crypto assets is on Uphold. Uphold has 300 plus cryptocurrencies, including Bitcoin, XRP, Ethereum, Solana, all your top assets, and many more. And they offer staking on 20 plus crypto assets. I've been using Uphold since 2018, folks. Yes, that long. They were one of my go-to exchanges, and they make it easy to buy, sell, stake, and so on and so forth. and they are reliable. I've never had any issues or problems with them. And folks, they are 100% reserve. You can review their transparency report on their website, so they don't commingle or lend out your crypto assets. They also have a great rewards program called Uphold Rewards, where you can earn up to 5.25% on stablecoins. You can get 24-hour early access to new tokens they list. And the stablecoins they support includes Ripple's RLUSD and USBC. Now with Ripple's RLUSD, you earn up to 5% there, and with USBC, you earn up to 5.25% there. And in order to participate, you just simply have to open the app once per month, deposit $50 once per month, and trade $50 once per month. So if you're doing any dollar cost averaging or whatever it may be, I mean, the threshold $50 is nothing, right? You can participate and earn that yield. So it's a great rewards program here. So check it out, folks. The link will be in the description. Now, look at this. Circle has expanded their strategic collaboration with Fireblocks. So Jeremy Allaire, founder and CEO of Circle, says two leading infrastructure platform players working together to accelerate and advance mainstream adoption of stablecoin finance. Now, he goes into a full list of key components here. It's a lot to read out, so I'm going to skip through, but it's great that they're forming this partnership. And I think we're going to see a lot of innovation and expansion of services in the stablecoin sector because the Genius Act has been passed. There's clarity, so everybody knows what the rules are, and you can imagine they're going to go all in, start building. Competition's going to heat up. And one of the things we've been talking about for the past year is that banks are waiting. They've been chomping at the bit to launch crypto services, including launching their own stablecoins. We heard from Bank of America and Citibank that they want to do that. So don't be surprised. We see in the next couple of months, they launch their stable coins, and it's going to be very interesting how the competition and the landscape is going to play out here. It's going to be very interesting, but competition is healthy, folks. That's very good for us as consumers and end users. Now, look at this. The SEC pushes back decisions on Bitwise Grayscale crypto ETFs to November. So there's a lot of applications on the SEC's table. So I don't want you guys to get bearish here because you hear that this is being pushed back to November. There are deadlines in October, such as the XRP and Solana spot ETFs, which I anticipate those are going to get passed. Why? The futures markets have been live, and I don't anticipate the SEC is going to push this back. Maybe they will. Maybe they're waiting on the Clarity Act. I don't know, but I'm going to be interviewing Commissioner Hester Peirce at the September 24th. She's going to be in my studio, so I'm going to sit down and talk to her and ask her about all these things. But I believe the SEC will approve the Solana and XRP ETFs, but the others, they may keep pushing back because no futures markets, right? That's what the SEC has required. But what we've seen is a lot of filers or issuers of ETFs, they've been throwing their hat in the ring. And I think everyone is doing it as a PR play, but also to get their place in line, because eventually there will be futures markets launched for the other assets like Dogecoin, like HBAR and the others that are in the mix. So the SEC has delayed decisions on the Bitwise Dogecoin ETF and Grayscale Hedera ETF, keeping both applications under review until November 12th. On Tuesday, the SEC pushed back its deadline on the New York Stock Exchange ARCA's proposal to list the Bitwise Dogecoin ETF. The application was first filed in March and published in the Federal Register on March 17th, beginning the statutory review period. That same day, the agency also extended its review of Grayscale's application to list the Hedera ETF, which is HBAR, of course, setting the same November deadline. Grayscale updated its filings for its long-standing Litecoin and Bitcoin Cash trusts, seeking to convert them from trusts into ETFs. Moving the trust to a national exchange would allow daily share creations and redemptions, keeping prices closer to net asset value and reducing the steep premiums and discounts seen in over-the-counter OTC trading. The article continues here saying the surge of altcoin ETF applications in 2025 has left the SEC with a growing backlog. As of July 31st, at least 31 altcoin spot ETF applications had been filed in the first half of 2025, including proposals for XRP, Dogecoin, Solana, Litecoin, Avalanche, and BNB. As of August 29th, at least 92 crypto-related ETF products were awaiting SEC decisions. Notably, institutional interest is especially high for Solana with 8 applications and XRP with 7 applications in line. So that's why I'm saying those two are going to get approved. futures markets, lots of demand. The others, I think, some of it is a PR play, some of it is get our place in line. And eventually, as the futures, starts getting launched for many of these like HBAR and so forth and Dogecoin, you should start seeing the approval. But once XRP and Solana are out of the gate, it's going to be very easy to do the others because they fall in the category outside of Ethereum and Bitcoin, which have been around for a while. So, guys, this Q4 could be really big for ETFs, and that approval and that timeline could align with a blow off top, in addition to crypto legislation getting passed in the Senate. So, this is where we're going to want to watch very carefully, very diligently, right? Pay attention because we don't want to be rolling straight into that bear market. We want to take our profits, right? But look at this. A Dogecoin ETF was launched today. And no, it's not a spot ETF. It's what a company did recently where they filed it as a C Corp. So it's not a traditional model, which the other players are trying to go after. So Eric Balchunas, ETF analyst at Bloomberg, says meme coin ETF era about to kick off. It looks like Doge slated for Thursday launch, albeit under the 40 Act. So he's highlighting it's different versus the big group that's under the 33 Act awaiting the SEC approval. He says, pretty sure this is the first ever US ETF to hold something that has no utility on purpose. Look, he's not wrong, but meme coins, this is the very interesting dynamic of the internet and crowdsourcing and what's called network effects, where you have, for example, one could argue Reddit in all the little subreddits that we see, it's like Metcalfe's law and Reed's law, networks being built and people crowdsourcing them and they're active on it. So same principles playing out here on blockchains, even if it's for a meme coin. So that in itself has value, but obviously utility even has even more value, if you know what I mean, where banks are using the blockchain tokenizing and so forth, right? So this is the world we live in. And I think, even as much as I have a love-hate relationship with meme coins, I have to admit that the idea of network effects is playing out here, and human beings are going to be human beings, and it's going to play out online in groups and communities and brands. And, if people are going to invest in it, then it is what it is. There's going to be a market for it, right? So, all right, let's move ahead. Look at this. This is very, very interesting. The US Senate Democrats offer competing framework for crypto market structure. You read that right, or heard that right. US Democrats, Senate Democrats, not Republicans. We know the Republicans largely have been on board. They've been pushing things through the House and in the Senate, of course. And we saw a lot of Democrats did partner with their colleagues across the aisle to get the legislation through the House. Now, one of the things I've been concerned about is that some of these Democrats are going to say, hey, man, we don't like what Trump is doing with all these crypto businesses. I know some Republicans who feel that way, too, that a president shouldn't be involved in these things. But that's a whole other conversation, as it relates to politics. But the fact that Democrats are doing this, guys, is very bullish. I don't mind them coming to the table and saying, hey, here's our version of the bill. That's progress. You know what I mean? It's better than them saying, we don't want to see anything. We don't want to talk about anything. This is very good. So let me give you the details. A group of Democratic U.S. senators has released its own version of guidelines to influence legislation to establish a crypto market structure focused on taking time toward a strong bipartisan outcome. In a Tuesday notice, 12 Democratic senators, several of whom are on the banking committee, unveiled a framework for market structure legislation in response to Republicans' plans. Like the Republicans' latest draft released on September 5th, the Democrats' framework includes provisions for regulatory clarity and laying out rules by which the SEC and the CFTC could handle digital assets. Folks, this is great. This is great. Here's a quote. We owe it to millions of Americans who participate in this market to create clear rules of the road that protect consumers and safeguard our markets, the senators wrote. We also must ensure that digital assets are not used to finance illicit activities or to line the pockets of politicians and their families. So that last line there, that's aimed at Trump. So this is where, maybe this is the compromise. Look, I wouldn't mind this, that you ban politicians, even the president, right? Let's be honest. I don't have a problem if the president's kids, get involved in certain businesses as long as they're not elected officials. They want to get involved in, that's totally fine. One of the things I've been on record saying, I don't like the Trump meme coin, man. That's not something any politician should have. And we saw California Governor Gavin Newsom, because of Trump's meme coin, said, I'm going to launch my own. That's, this is going to turn out bad. And imagine more politicians doing that, right? We can all agree, Democrat, Republican, Independent, whatever. It can't have it, man. Can't have it. It just creates a lot of problems, bad optics, and much more. So, with Democrats in the minority in the Senate, it's unclear whether Republicans will consider the framework recommendations as part of their plans to pass the bill out of the Banking Committee by October, out of the Agricultural Committee by November, and into law by 2026. Republican Senator Tim Scott, who chairs the Banking Committee, said in August that he expected between 12 to 18 Democrats to back the majority's version of the bill titled the Responsible Financial Innovation Act. So, folks, I think this is great. It's great to see the Democrats being proactive versus being against, a lot of this stuff like we've seen in the past 4 years. But guys, I told you all, I spoke to people in Washington, D.C. A lot of Democrats were not on board with Elizabeth Warren and Gary Gensler, but they couldn't speak out because Elizabeth Warren had that over financial oversight seat. She's one of the most popular Democrats. So it would be kind of political suicide to go out and say, oh, Elizabeth Warren's wrong, Gary Gensler is an idiot, right? They couldn't come out and do it. And if you recall, I had interviewed some Democrat members of Congress like Darren Soto, Ro Khanna, Wiley Nickel. And, they were trying to beat the drum, trying to get people on the Democrat side to start embracing this asset class because they were very educated about technology and that this is not a political thing. But unfortunately, Elizabeth Warren screwed them over here. So many of them wanted to get this through. And we saw many of them join with their colleagues to get the Fit 21 bill passed, the Genius Act passed. So they've been doing their stuff in the House. Senate, good to see we got 12 to 18 here looking to get this done. So guys, this is good news. I like what I'm seeing here, and fingers crossed we can get this thing through in Q4, and it could really help spark a massive bull run, or heat up the bull run once it gets going. Now, final news item here, HSBC, BNP Paribas, if I'm saying that right, back Canton Foundation in the institutional tokenization push. So the Canton network is a new blockchain. And I had just interviewed this CEO just a couple of weeks ago. The interview is actually going to be published tomorrow, so it's good timing here. And that blockchain, folks, the investors include Goldman Sachs, Citadel, and the blockchain is very unique. It's built for institutions for the most part. It's a public blockchain, but with a massive privacy component built in, because we know many institutions, they're not going to want a lot of data out there on public blockchains. They're going to have to secure it, right? Regulatory laws and much more protecting people's information. They're going to have that. So Canton, they're actually going to launch their token soon. This is a blockchain to watch, and I may invest in a token. I'm not saying I will, not financial advice, but the fact that they're getting banks on board is very bullish. So look at this. Two major global banks, BNP Paribas and HSBC, have joined the Canton Foundation, the development organization of the tokenization-focused Canton network, underscoring continued institutional interest in real-world applications and blockchain technology. The foundation announced Tuesday that BNP Paribas and HSBC are now members, alongside recent entrants Goldman Sachs, Hong Kong FMI Services, and Moody's Ratings. Those are some big names, folks. With more than 30 members, the Canton Foundation provides governance and strategic direction for the network while advancing blockchain-based financial use cases. Canton Network is a blockchain designed for institutional finance with a core focus on real-world asset tokenization, regulatory compliance, and interoperability. BNP Paribas, head of global markets Hubert de Lambilly, said the move reflects the bank's commitment to adopted distributed ledger technology to serve our evolving client needs. BNP's involvement builds on its prior backing of Digital Asset, the company behind the Canton network. The French bank participated in Digital Asset's $135 million funding round. So the banks participated in the funding, as mentioned earlier, Goldman Sachs and so forth, and they're now part of the foundation and they're building on the blockchain. This is something to watch out for. Remember what I'm telling you here. And I'm not saying this because I have some insider information. I'm just seeing what the hell is happening here, with regards to who's participating. I often tell you guys, as you're doing your research and looking for blockchains, look at the ones that are getting the investments and getting real world adoption from real companies, not just crypto native companies. But if you got banks and these folks involved, something to watch. So don't be surprised if I come to you guys a couple months and I'm like, hey, I just added the Canton token to my portfolio. So I'm giving you the signal here. And again, not financial advice. You should go do your own research. Not because I'm saying these things means you go buy. I'm just letting you know what I'm doing. So this is very, very interesting and some very big names involved here, folks. So make sure you catch the interview tomorrow with the founder of Digital Assets, which works on Canton Network. That interview will be published in the mornings. So folks, it's exciting times. Things are on the rise. The prices will catch up. Be patient. I keep telling you guys we're in a bull market. I know I didn't touch on the charts today because there's nothing new to report here. I told you guys we got to wait out the bears who are in control of Bitcoin right now on the weekly chart. The MACD shows it. So expect downside, but we're going to bottom this month. And then we're going to start getting out of the hole, higher highs, higher lows, and then parabolic phase is going to start. So get ready. Just be patient. Patience is so important. Don't be emotional. Be educated. As I've been saying, that's my new slogan. Don't be emotional. Be educated, right? Understand the nature of the markets, the fundamentals, the principles, the data, the metrics I've been sharing with you guys in the newsletter and much more. And speaking of the newsletter, make sure you're subscribed to it. It is 100% free. It's on Substack. Link will be in the description. Check out my book on Amazon. It's available in paperback and digital, and my course at mycryptocourse.com. If this is all new to you, this is the course for you. Expand your knowledge. Knowledge is power. This course is comprehensive. It covers every aspect of crypto, includes tons of video content, write-ups, and much more. Folks, go to mycryptocourse.com to learn. Thank you so much for watching and listening. I appreciate you all, and I'll talk to you all later.